Welcome back, guys and gals. Welcome back. Welcome back. It's that time of day again. 7:30 a.m. Eastern Time, Monday through Friday. Welcome back to our crude oil morning prep. My name is Joseph James. I'm a lonely old day trader here at SchoolOfTrade.com. Come out and see me Monday through Friday at 8 a.m. Eastern Time in our live trade room. And I've got my good friend and pit analyst, Mr. Marty Errico. He's from Traders Audio. He's got his feet on the ground on the NYMEX exchange. And we're providing you with what I think to be the very most unique and effective way to begin your day every morning when trading crude oil, natural gas, futures. Once again, my name is Joseph. Thank you so much for watching this morning. I'm a technical analyst. I'm going to be providing you with a top-down technical approach, and that means we're going from weeklies to dailies to hourlies, all the way down to those fine-tuned minute charts. And the goal is to analyze what's happened over the last 2 weeks, over the last few hours, and, of course, over the last few minutes. I'm going to analyze the overnight session. Now, I'm trading in the U.S. morning session, so I'll be analyzing the session that is previous to that, which is the London trading session. If I was trading the London session, I would analyze the Asian session before that. Okay, so just be aware of that. We know that the analyzing London will provide me with direction at the open. If I can anticipate direction at the open, okay, 8 o'clock till 10 o'clock, if I can anticipate the direction at the open, well, then I can find those high percentage trading opportunities using some proprietary indicators, using some support and resistance, using some technical chart patterns. So all we're doing this morning is looking for those high percentage opportunities that are going to kick off around 8 o'clock Eastern Time this morning when we start the U.S. morning trading session. There are lots of trading opportunities every day, but the high percentage opportunities, those are the ones we're looking to capitalize on. When I'm done with you guys, I'm going to toss you all the way from Los Angeles all the way across the country to the NYMEX exchange in New York City. Marty Errico is braving the elements. He's our pit analyst from Traders Audio, and he'll be providing us with a very unique commentary this morning. We do not get this pre-market at all, which is very unique and a very effective way to compare to technical analysis. We're looking at intermarket direction and divergence. We're looking at market internals, option prices, and of course those very important and oftentimes confusing and elusive pit session trading levels. So keep an eye out for those pit levels because they're always going to be on our mind today. Alrighty, you've heard enough out of me. Let's grab some charts. Let's prepare for the week or for the day ahead. Now, speaking of the week, this is the end of the week, and just like we always like to begin the week and finish the week, we have a crude oil weekly chart. Now, a weekly chart, always a good idea to be aware of where we are in the big scheme of things. But remember, kids, if you're following along at home right now, we don't really get the price levels from these weekly charts. We don't really get those trading opportunities from the weekly charts unless we're sitting at major support or major resistance. This weekly chart shows me that we have broken above the highs of the wedge. You can see the price wedge. You may call it a flag. You may call it a pennant, whatever you call it. I call it a wedge. Higher lows, lower highs. We are above it. Now, this weekly chart showing me that we had strength to go higher. But look closely at that weekly candle, and what do we see? Look closely at it. I see a big wick at the top, and I see a body at the bottom. It's a green body, which tells me that, yes, we have been bullish this week, as if we didn't know that already, right? You'd have to be living under a rock not to notice the fact that we went from 100 to 106 this week. So we know we've been bullish, but the big clue from this weekly chart is that it appears price has gone up, pardon the pun, but run out of gas and now pulled back off those highs. So we're waiting to see this morning, is crude going to have the chutzpah, right, to keep pushing higher? Is it going to have the cojones to keep pushing higher? Will the demand be there? We've got news at 8:30 this morning. Will the demand be there this morning? We'll have to wait and see. But we know for one thing, we're off the weekly highs. Will we collapse off those weekly highs, or will we keep on pushing to close this weekly candle with a big, fat, full-bodied green candle? We'll have to wait and see what happens for that. Moving on now to a daily chart. We look at a daily chart of crude oil, and we can see a lot of similar situation, but now we see a little bit more information. This is important. We notice two things. Well, actually, I noticed three things on this chart. The first thing I notice is, of course, the bull channel. right? The bull channel, higher lows, higher highs, we're moving higher. Yeah, Joe. We know that already. You told us that. Second thing I see, symmetry pattern. A, B, C, D. We have a symmetry resistance at 108.90. Now, symmetry is a great, I love symmetry because it acts as both a price magnet to get price to go higher, and it also, once we get up there, that's where we're going to get a great price reversal trade and be able to sell it right back down, and then we'll use our trigger zones, right, for a target below us. Well, wishful thinking right now, Joe. We're not quite there yet. First thing was the bull channel. Second thing was the symmetry. Both of those tell us to expect higher prices. But the third thing I see, let's zoom in right on these daily candles, because don't forget, this is a daily chart, a 1440 minute, right? 1440 minutes in one day. So we look at this now, okay, what are we seeing here? Remember we talked about that weekly chart showing us that big candlestick wick at the top. Look at the candlesticks here. We had Wednesday's candle, nice big green candle. Thursday's candle, we got kind of a middle red candle. You'll notice wicks on both the top and the bottom on the Thursday candle, although it being shaded red, so it was a lower close than the open. The reality, though, is now we can see we're trading inside of the range still. We have a bullish green candle, and this leads me to believe that we are going to attempt, keyword there, attempt, we'll see what the news comes out this morning at 8:30, we're going to attempt to make a new test of the highs. Now, of course, this is a daily chart, so we know that this range is likely to be used today. So look for that, well, we're going to see right now. Let's move from the daily chart now. Let's go down to a 4-hour chart. The daily chart's telling me a story. The daily chart's telling me, Joe, if you weren't paying attention this week, this is what happened. It's an aggregator of all the information that's happened this week so far, right? I find it to be very useful for oversight. But again, we're not going to find patterns on it. Let's dig in a little bit deeper. Down to a 4-hour. Now we move down to a 4-hour, jackpot. Now we've got the information that we start to see, okay, this is telling us more. Now we can see, again, a lot of the same stuff. Bull channel, symmetry pattern, right? Bullish channel, symmetry pattern, same stuff. Not a lot's changed. But now we can see if we're going higher, our target is 107.11. If we collapse here today, our target is 103.26. The 4-hour chart gives us a lot more information. We still don't know, though, is this market going to rise or is it going to fall? We know what the targets look like below us at 103.26, targets above us at 107.11, so we know where we're going to be shooting for if the buyers are in control and we're buying, or if they collapse and we start selling. So keep an eye on those levels here this morning. Those will be excellent daily profit targets for you. But I need a little bit more. I still can't tell. We don't have much support here to work with at this time, right? Get a little bit of a trend line there, but not much. I have a feeling the 60-minute chart, we go down one more level here. I have a feeling we're going to get a lot more out of that. Let's take a look. Now we're talking. And this is when I love being a trader. We start with our weeklies, our dailies, right? We're leaving breadcrumbs along the way to remember our way back. We start to listen in on this story the market personality is telling us. The candlesticks are telling us a story. And here this morning now, this story now ends with one of the chapters towards the end of the book, tells us now, here's how to take action. Remember, we've seen clues of bullish price action on the weeklies, the dailies, and the 4-hour. But we didn't quite know whether we were going to collapse or whether we were going to go higher. We know now, look at the strength of this market here at the bottom of this bull channel. Now, Joe, didn't you say something about this yesterday? Didn't we say something about, I don't know, 104.25? We went to 104.27 yesterday. So I was talking to Marty this morning before we started the broadcast, and both of us agreed how easy this buy was at 104. Again, we said 25. 27 is darn close enough. That was the previous low of day from yesterday. And again, as I said yesterday in our call yesterday, the best buying opportunity of the week is going to come at that 104.25 and the low of this bullish channel. Here it is now, guys. If you've been following along at home this week, we should all be ready here to be buying these lows. We're buying pullbacks on the way to a target at 105.88, target at 106.78 overhead. Now, if we look at this, it's going to be much easier for the buyers to move this price higher than for the sellers to move this thing lower. So we will have an opportunity for a failure pattern right now, right? We will, when you see the next chart, we will see an opportunity to sell this thing short in the short term. But as far as a long-term short goes, be very careful trying to sell in this zone here below us. I would be very careful, wait to get below the 104.27, and then we can get selling retracements here if that time comes here today. We may not get enough time here today. It is a summertime Friday morning, which does mean we will not have time on our side. I need one more chart with you guys here. Let's find out where we can have that collapse. 5-minute chart. Now, the 5-minute chart really shows a big clue here. Look at the narrow range coming in overnight. We know that a narrow range usually means a narrow range on the day. This is only a 50 cent, a $0.50 trading range. That is historically very narrow for crude oil futures happening overnight. We can assume the most of that is because of the big drop that we saw yesterday. So we knew selling retracements yesterday morning, right? That made us our money on crude, took us down to 104.25. Now we have a very, sideways narrow range that has resulted in a breakout. We have the breakout here in price. Now, we know that we'd like to be buying pullbacks, so we will be looking to buy pullbacks here. However, if that pullback fails, this narrow range tells us that we could easily tumble back lower. So be aware of that. The narrow range tells us something is lacking confidence. We've got news this morning at 8:30 a.m. Don't forget, 8:30 a.m. news this morning. We've got news at 9:55 a.m. Eastern time today. I've got producer prices at 8:30. I've got 9:55 consumer sentiment this morning. Those are two major news events here that may just send this market personality back lower. Tough to tell what happens right now as we wait for that news to be released, but we can easily see that right now this price could easily pull back quite a bit. Again, I'm going to be focused not on buying at the highs. I'll be focused on buying pullbacks. So I'm looking to get long here as we pull back. And again, the minute that pullback fails, we know that sideways range, we know that narrow range is going to snap that price back into that range, and we're going to sell here. I'll be looking to sell short once we get below that 104.98, 105.12, 105.31, probably 105.31. We'll say 105.12 to 104.98. That's what we start to see here, most likely that failure. Use that trend line below us as support. And as you can see here, as we move overhead, we don't have a lot of levels to worry about overhead. As we go higher here this morning, the only real levels we have to work with here, again, we're already at the 105.51 reversal level. So we're already there. If we keep pushing higher, we got 105.84, 106.13, and then a big jump up to 107.45, which is the high print of Thursday's price action. As we go lower here this morning, you can see we've already broken that price reversal zone, but we still have a reversal zone below us at 104.45, 104.31. Keep an eye on the previous low of day. This will always be a great spot to be a buyer. So if I'm wrong about this price going higher today, right, if price does collapse here, we will look for buying opportunities at these lows. Don't forget, too, we've got the lows of the week here, 103.68, down at the lows. Again, as we go lower, I'm going to be considering buying opportunities as we go lower. In fact, I'll be looking for buying opportunities all the way down until we get below this reversal zone. I've got to get below 104.31 before I'm going to start selling short here this morning on crude. Okay, the high percentage trades are long until we get below 104.31. Short-term reversals, I can get short here, like I said earlier, but just be aware, though, big drops often equal to big pops. We had a big drop yesterday. I would not be surprised at all if we see a very big run-up today, especially with some news coming on the market. All right, if we don't get the bulls in charge, it's going to collapse into that trading range once again, so be ready for it. Now, that's what I'm seeing on my end. I'm seeing bullish sentiment here this morning using that bull channel on the 60-minute chart. I'm thinking we're going to keep going higher here today. We do have a chance the news event might come out and kind of stall things a little bit here, but I want to hear what Marty has to say. I want to see what Marty's seeing on his end. Because, you know, Marty's got his finger on the pulse of the market personality right now. He's in the NYMEX exchange. Marty, thanks for joining us today. Thanks for braving the elements out there in the NYMEX. What are you seeing? Are you seeing this narrow breakout range too? What do you think, my man?
Well, yeah, I mean, if we can stay above below this 175, yeah, this could be a very tight range between 105, 104, sorry, 104 half and 105 half. Really, think about it. It could be a dollar range that we could just consolidate in right now on a summertime Friday. But I don't think that's likely to happen. I think that we do have a bunch of catalysts that can move this market. So I don't think we're just going to sit in a little range when there are so many factors that are driving this market. So if I may just start by taking a look here at our usual suspects as we do every morning. I'm looking at RBOB, heating oil, crude. Again, they're all in positive territory. Brent, positive territory today, all catching just a bit of a bid to the upside, but rather sideways and waiting for the breakout, if you will. Look at our spreads this morning. Our spreads are actually looking a little bearish. They're not giving us that life yet to pop out. So, again, the spreads are telling me that we're not going to break out yet in terms of just looking at the Brent WTI spread right now. It's in backwardation just a bit. It's around 260. It's a lot of volatility in that spread. Looking at the calendar spreads, again, these things, they bursted out of the money, and now they're just fading, I think, off the highs because these spreads, they just bursted, and it's the only thing really a lot of traders have been talking about. I mean, if you just pull up a chart price, just look at the price of the spreads. You look at the Augie SEP, Augie ACK, Augie Novi, Augie DEES. I mean, they just exploded up to $5, $6. They're just tremendous in terms of just how these spreads popped out of price and how it moves crude. Crude really started moving and in relation to the spreads moving. So we got your dollar today just trading a little bit higher. Actually, I said it was lower, but it's actually trading a little bit higher. Again, it's off a high, so it is kind of trading a little lower if you ask me. But right now here, we're watching your dollar just kind of pulling back to a little bit of a wave, but now making new highs as we trade 83, 82. Euro currency, that's the one that's in the new lows. So Euro has been catching just a little bit of an offer, as well as the rest of our commodity currencies that we like to keep an eye on here. So where are we? We're at the low of the wedge, and we were looking to get long here. Me and JJ were talking about that long price, and then we're talking about the high 107.50. That could be an awfully nice target, and 108.50 another target here. If I could move to natural gas here yesterday had an inventory number with 82 BCF. We ended up seeing it actually come in line with expectations at 82 BCF, and we ended up trading a little bit lower. Overall, it was a build, so that is kind of bearish for natural gas, but you can see the chart now. We're coming to the lower range. I was speaking to one of my friends about just how the low of the range is going to be 357 half, 357 even. This is pretty much the low. If you go back, we hit it about 4 or 5 times here. So 1, 2, 3, 4 times now. And this can hold us some nice support on natural gas. So I'll be buying the channel low. I'll be buying the wedge low. And I'm going to try to take this thing back up to around 370. So again, that's really what they're looking at in natural gas as well on the screen and in the pit. Again, there has been some buyers coming in permanently. In the pit, guys, we have been seeing just still increased activity, basically to the downside, really. I want to say that a lot of profit taking came in the pit. Goldman, SES, major players, guys, coming in, taking their profit. Larger locals still show their hand, and they're still net long. They still like the volatility. They're still buying vol, and they're still trying to buy 108 calls, 110 calls. So the larger locals are still kind of holding their own, still looking long, but the paper starts to really take off their positions, which is pretty impressive because really they were the ones who were leading this whole market higher. And when they start to sell off just a bit here and start to take positions off the table, it's kind of interesting how it shifts the market around. And yesterday, that's what it was. We were traded lower, a little bit of a slight chop to the downside. The paper was doing their selling. They were taking off all their positions. Now what I got here is just locals, basically. They're probably going to come in today and just try to manage their positions and scalp around their net long positions. Again, they tend to scalp around the net long positions. Levels today from yesterday here. Again, I got levels today and from yesterday here. We're looking at your pit session high, 105.97. Your pit session low, 104.31. We end up closing and settling the day at 104.88. Right, 104.88 is where we close and settle the day there. Daily pivot today, 105.05, which we are actually trading above at the moment here. Again, above that 105.05 daily pivot. Resistance up above at that 105.79. Again, I said 75 earlier. It's 79, sorry. So, right, that 105.79. If we don't break above that, that's going to be our first really clue to start selling these highs, and we're going to trade within a very ugly range of 104 basically to 105, right? Because we're going to bounce off of the 105.80. We're going to sell it off just a bit, and then it's going to be a very ugly range. So we have to break that 105.75, 105.79, which is going to be our first level of R1 resistance here in the pit and on the screen. I got 106.71 and 108.38, the high end of the range. These are all levels of resistance that we could be using to get up to the high end of that range and that channel, right? Get up to that channel high. Support down below, I got 104.13, 103.39, and 101.73. I also want to add in a couple of levels to the downside. If we do break below here, I got some levels that JJ was talking about here, guys. I got that 102.57, 102.13, 101.44 major levels, guys, down to the downside that we want to keep an eye on. Again, that the market can drift to. It do go lower, hey, but I think we trade sideways to slightly higher today. And depending on what happens with the news and what comes out of the pit and whether volatility is in or not today, that will really dictate whether we trade higher or lower, I think, today, or really whether we break out again. So where are those levels there again? Hold on, let me get those levels here. So again, those are your levels, guys, for your crude and natural gas today. Let me get those natural gas levels here, don't worry. Volatility 25%, open interest 165,790. Again, keeps on falling and increasing in the August, but again, we're kind of in the middle of the roll in the pit as I spoke about the last 3 days. And options activity to the upside, as I mentioned, they got 108s, 110s, and 112s. Downside, they're starting to shore up the put side as they're getting ready for the fall, 105, 103, 195 puts, all trading a couple thousand times. Let's talk about natural gas. We just looked at the chart, and we just basically put a little bit of a game plan of attack in line for natural gas. Again, we're going to be looking for some buying opportunities, right, in the natural gas that we spoke about. Well, let's quickly take a look here at some prices, right? So I got your natural gas pit session high up at 370.20, pit session low at 357.40. Big downside yesterday. Again, almost 40 ticks to the downside because of the fact that we had inventory numbers. Settlement number yesterday actually, 361 even, right? Got your pit session daily pivot today here at 362.90. Yep, 362.90 daily pivot. Resistance up above, I got 372.90, 377.70, and 387.80. Down below, I got 361.70, 357.70, and 348.80. So let's watch those buying opportunities in the bottom of the wedge, in the low end of the wedge, and once again, coming off of that all-important level of 357. I mean, if you see the 357, just buy it. So again, watch for a break above yesterday's high print and possibly then a little bit of a range here failure. So again, we're looking a little bit higher here. Baker Hughes rig counts are released today at 1 o'clock as well, so just beware and be careful of that, guys. Again, Baker Hughes rig counts coming out. All right, guys, I'll see you all in just a little while here, about 8:50 here. Just give me about 50 minutes, and I'll be back with you all. Let me send it on over back to JJ. And JJ, the fact of the day is that I got from a couple of my friends down here. They're saying that really the full downtrend will begin once we settle below the 102.80. So keep that on the back. Keep that on your books there.
102.80. 102.80. You got it.
Downtrend here.
You got it. That's what I'm talking about. That's some priceless information right there. 102.80. Awesome. Thanks, Marty.
Begins the downtrend there.
Got it. So we're looking at on an hourly chart of this, 102.80 puts us right here, right? Just about back down to that A point of our symmetry, right? 102.80 right there. All righty. That's our line in the sand there coming out of the pit this morning. Marty Errico from Traders Audio, guys. Thank you so much, Marty, for coming in and joining us, as always. A very effective way to do it. And I want to thank you all as well. Thank each and every one of you guys for spending your week here with us, spending your morning here with us. Now, don't forget, we're not perfect, right? We're human beings. We always make mistakes. We want to know what mistakes we made this week. What would you see better? What would you like to see included in this broadcast next week? Would you like more of something, less of something, right? A little more cowbell maybe? I'm kidding with you on a Friday morning. Have a great summertime Friday. We've got news at 8:30 coming out the gate about a half an hour from now. Charts are updated on our blog this morning, so you can go right over to the Crude Oil Squawk blog. Head over to Sideways Markets. There's a link there for you to the Crude Oil Squawk blog. All of our notes are posted here today for you. I'll have the video up there for you shortly after we finish the call today. Don't forget, guys, to learn it so you can earn it. Be careful out there. Summertime Fridays are always early in, early out. Make that money and head to the sidelines here before the volume slows down. We'll be trading here from 8 a.m. until 11 a.m. this morning in our live trade room. Drop me an email at jj@SchoolOfTrade. Don't forget to log in and go see Marty. He's Marty at Traders Audio. His broadcast starts at 8:50 a.m. Eastern Time, Monday through Friday. Him and his partner Jeffrey do a great job in the NYMEX exchange. Thank you to Marty. Thank you to the entire team at Traders Audio. And thank you to all of you for being here this week. Have a great weekend. We'll see you back here for a Monday edition of our Crude Oil Morning Prep. Have a great weekend. Adios, amigos. Bye-bye for now.